The federal government of Nigeria, via the Debt Management Office, that's the DMO, has opened the subscription window for the January 2025 federal government savings bonds. Of course, I'm running from January 13 to January 17, 2025. The offering includes a 2-year bond maturing on January 2022-2027 with a 235% interest rate, and a 3-year bond maturing on January 22, 2028, offering 18.35, that is 235%. Now, this initiative invites individual and investors, so to speak, to participate. And of course, this is meant to provide some sort of secured investment options with competitive returns for those who might be willing to plug their finance in. So to help us understand this better, I'm being joined by Nosakhare Eghe-abe, who is an investment analyst at Parthian Partners. Thank you so much for joining us on the show.
Thank you very much for having me.
Of course, it's nice to have you around. So first, what do you make of these 2025 bonds that has been provided by the Nigerian government?
Yeah, I think it's very interesting. The bonds are basically used to fund some expenditures on the government's books. So the government basically is reaching out to Nigerians and asking for us to help in fund some projects on ground. Again, they are more long-term, so they are 2 to 3 years, which is very different from treasury bills, which are basically short-term, which are 365 days. So basically that is the gist. So the government is asking the public to lend it some money for a long term, 2 or 3 years, and basically are able to lock in rates at the current elevated level of 17% or 18% based on the duration of the bond that you're interested in.
Okay, so help us understand, are there potential downsides to these federal government bonds, looking at the current economic situation in the country?
Well, again, you're investing in Nigeria. So on that sense, as it's commonly stated that if you bet on the government, your money is not meant to go. So on a risk basis, it's actually quite low. On a risk basis, it's actually quite low when compared to other investments and instruments, or compared to other investment instruments available on the market, that being either equities or the likes. So risk is very low. You get your payments, your coupon payment or your interest payment quarterly. So the first one is going to come up in April 22nd, 2025. So you get it 4 times until it gets matured, then you get your principal back. So you're able to plan. So you know when the coupon payment is coming, and you're able to know, okay, am I going to invest this into other instruments, or am I using that money for whatever, or am I just using that money for the bills that I have on ground? So it just gives you the ability to plan ahead and also to lock in rates at current elevated levels.
Okay, so let's look at the interest rates. We'll do a bit of comparison because it's one of the things you mentioned. Now, how does the interest rates offered by these saving bonds? I mean, we're talking about 17.235% for the 2-year bond and 18.235% for the 3-year bond. So when you do a comparison with other investment options available, how would you describe it?
Okay, I think it's very interesting right now. Short-term instruments, just like treasury bills, actually have 20% interest rate of them right now. In the market, we call this like long-term rates, which are supposed to have higher interest rates when compared to short-term rates. It's not like the reverse is currently the situation. That might mean that in the long term, people are expecting rates to drop, but currently rates are quite high at 27.25%. To say that the yield curve is inverse. But the good thing about savings bonds, though, is that if you compare it to treasury bills, that let's say on average are doing 20%, you know that treasury bills are short term. So you get your interest payment up front, and then you get your principal when everything is matured. But for savings bond, is a long-term thing. So at 17% and 18%, you are sure that by 2028, which I believe is the last year, 2028, that you are still locked in at 18%. By 2026, other things being equal, T-bills won't be giving you 20% and might not be able to compete at 18%. Again, it's all about what your saving goals and what you are investing towards. If you are looking for something short term, then I think there are other investment options on the market. But if you are looking at a long term instrument, then the savings bond is quite an attractive offer.
That's quite interesting. Let's now tie that to the impact of the Central Bank of Nigeria's consistent efforts to tighten monetary policy on the attractiveness of the savings bonds to investors. How do you see that too?
Yes, I think the great thing right now is that the barriers for entry for retail investors are quite low due to technology and also the CBN's push to broaden the retail base. Again, the minimum that one can invest in savings bond is 5,000 naira. That means even a student will be able to invest in this kind of instrument, which is very good. Which it just ensures that the gains of the capital market is spread far and wide to everybody that has access. So it's just by just reaching out to your stockbroker, you are able to get these instruments. Again, the CBN has raised rates. They have been raising rates since 2023. Rates have gone up by like 850 basis points when compared to 2023. Currently, rates are like 27.25, which is the highest that we have experienced in the nation, just to combat inflation, basically. And inflation is at 33%. So we do know that if we're talking about in real rate terms, there's a negative, but still you are able to gain on your investment. So I do think that is very interesting. We are looking forward to seeing what December and January inflation figures will look like ahead of the MPC meeting in February, which will then allow us to know, where the CBN is at when it comes to interest rates, and then we can know moving forward. But again, forecasts are that by the end of this year, rates should drop. So so we have to have that at the back of our mind when we're making decisions like this. Thank you.
Okay, so let's also understand how the increased appeal of longer-term securities, such as these savings bonds by the government, affect the overall investment landscape in Nigeria.
Okay, I think the interesting thing is that these bonds have become quite popular, and one can pick that the popularity up from last year, or even from 2023, when rates started going up, and it became common parlance as to how do we take advantage of these bonds. Now, a good thing about long-term interest rates, the good thing about long-term investments is that you are able to plan, which I think is very key. So you're able to put the cash down and know that this will give me something higher than what I will get from my deposits in the bank account if you leave the cash in the bank. So I do think it will get more popular if rates remain as elevated as this. And I forecast that if rates do reduce, investors will move on to other instruments that maybe give them more return on their money or based on what their investment goals are.
Well, you've talked about how this would impact or attract individuals and, of course, the local economy by and large. But then I'd like to find out what role you think the foreign portfolio investors would play in the demand for the Nigerian bonds.
I think that is a very important question because FPIs, which is foreign portfolio investors, play a significant role in ensuring that we have dollar liquidity in our market. So providing instruments that at least reduce the real rates in which foreign investors are able to play in our market is quite important. So I do think that it is very important because if you compare the January 2024 issuance of savings bonds to now, the rates have gone up by 7%. Just like a basic comparison, the rates have gone up by 7%, which is very interesting. And if the naira does remain stable, then we do know that the the exchange rate risk that is basically coming in and facing a devaluation and depreciation is lower for the investors. So you're just trying to ensure that whatever risk that they might see due to investing in Nigeria, we minimize it as possible. And I think providing competitive rates will ensure that foreign investors are able to play in the market. I do think it's important to also note that FPI is basically called hot money because these instruments are tradable and they are able to come in and out of the market as the same fit. But it is still an important source of dollar inflow into our market.
Okay, even as we wrap up, let's look at this 2-year bond that's set to mature January 22, 2027, and the 3-year bond that's set to mature January 22, 2028. Now, how does the settlement date and the quarterly coupon payment schedule for the saving bonds would impact investors' cash flow and management, and of course, their expectations?
Okay, I do think that the main thing, which is very important, is that the government pays when the government says it's going to pay, which is very key. Because again, the market works on sentiment, and we do not want a situation in which the government is not able to pay, or the government does not share information ahead of time that it won't be willing to pay, or it won't be able to pay at whatever settlement date. So that is very important. Again, because one would assume that investing in a 2-year or a 3-year bond, investors already know what their cash flow from these investments will be, and have already planned their aims or goals for this inflow or this potential inflow. So I believe that is very interesting. So everybody has their own investment goals, whether it's to pay school fees or to deal with whatever bills, or to invest back into the market again. Because these bills and these bonds come out monthly. When the 2027 bond matures, they're also able to invest maybe at a higher rate at that time. So it is quite interesting. My personal forecast is that I believe the government will be able to pay. I believe the sentiment currently is high. The barriers to entry into our bond market or our fixed income market has never been lower. With iInvest, Parthian's app, you're able to gain access to all these investments and securities. So I do think like that is quite important and quite interesting, going and seeing that if you're tracking the development of our market thus far.
Okay. Well, we hope that with these latest CBN efforts, they will be able to stabilize the market, stave off inflation, and ensure that the Nigerian bonds market is actually attractive to would-be investors. Thank you so much, Nosakhare Eghe-abe, investment analyst at Parthian Partners, for your time on the show.
Thank you very much.